What's going on, guys? Welcome back to Counter Trend Capital. It's your boy Tim Aslan here. Welcome into the video. I want to give you guys a Bitcoin update today. So we're going to start on the daily time frame here. And as you can see, we've just been in this range for a long time here, almost a whole month. And if you want to count back here, we've been in this range for almost 47 days. So a really long time to be stuck in this range. That's why the updates aren't super consistent, because we're just pretty much going sideways. We're waiting for a direction and then we'll go from there. So first thing I want to point out on the daily time frame is that we've gotten these 3 red candles in a row, 2 confirmed. This one is still open, but usually that's a pretty bearish indication. And it usually indicates more downside. The next thing I want to point out is the Bollinger Bands are starting to squeeze together. But this top one right here is actually starting to curl downward. And then usually when they squeeze downward and we're below the median line, it usually is also a bearish indication that we continue down. So that's all for the daily. Let's go to the 1 hour. I'm going to turn these off. And then let's talk about the count. So there's a couple different options for the count right now. Originally, we had this as a W, X, and then we're expecting the Y leg down. And that's because this first move down here is a triple wave, and it looks kind of weird to label it as a 5-wave move down. But I think now that we've had all this chop and weirdness, and then this is starting a new sequence down, we're just going to label it an A for now, just to keep it simple. Then I think this right here can be labeled as a triangle. And so our B would be up here, and now we're looking for our C to the downside. And so for those not familiar with the triangle, we would use the ABCDE tool right here. And what it is, it would be triple wave A, triple wave B, triple wave C, triple wave D, triple wave E. And then once E is confirmed, the triangle breaks to the downside, which it did. And you can see when we put on some trend lines here, that's exactly what happened. So this is how we have it labeled for now. The other way we can label it is, like I mentioned, with a W here, then an X either here or here, and then the Y would be to the downside. The problem with this is it would be more bearish to the downside, because for the Y leg of a WXY, we would have to have an ABC within it, right? So this would be a 1, 2, 3, 4, 5 as an A. And then we would have to do a B up, and then our C would have to go much lower. So those targets to the downside would be lower than if this was just a C leg, because a C leg would be 5 wave move down, which we can see 1, 2, 3, 4, 5 would get us to the more shallow targets of this move. Another thing that's important to know is, because we have this triangle here, when we do our fib pull, instead of pulling from the top of the move right here, which is the highest point, we pull from the E, which is the 3rd lowest move here. And so our targets are slightly lower than if we would have pulled from the top. So that's something to keep in mind. And then these would be the downside targets. If we do bounce from this area, then we didn't get the minimum retracement target of the 382, and that's of the entire move. So I'll show you that real quick as a refresher. So from the very bottom to the top, we have this as an ABC. So if we are still bullish and we want to turn this into a WXY, this would be a W, an X here, and then a Y would take us much higher. if we do want to do that, the minimum retracement would have to be at least 38% of this entire move up, which hitting this first 100% target would not satisfy that requirement. So if we do stop there and continue up, then we would expect a larger correction down that would satisfy the minimum target. I also want to point out we still have a big CME gap down here in the $21,000 region, which also matches the 702, which is a commonly retraced to fib. So that is a possible scenario where we go here, then we do another triple up and do that larger correction to fill this gap before heading a lot higher. There is also another way we could get down there, and that is if this is a 1-2, 1-2, then we do a 3-4-5, 3-4-5, a bigger correction here as an A, then we do a bigger correction as a B in the form of a triple wave, and then another bigger correction as a C, taking us down, again filling that CME gap, and maybe even lower, breaking this low because there's lots of locked liquidity here, and that could take us to the 18 to 19K region. So that's a couple different scenarios to think about to the downside. However, we will most likely be trying a long at these targets because especially if we break this minimum 382, once we reach this area, it is possible that we go up and break our 31K high. So again, we are bearish until this low gets taken out here. And another thing I wanted to mention as well is remember how long we have been in this range. It's been about almost 2 months here, right? So I'll just draw a trend line here. So we've been above this range for almost 2 months. And what usually happens when we're just at these range highs is that there's a lot of liquidity right here, right? So if people are longing, where do they usually put their stop loss? They usually put their stop loss at these lows right here. So there's a lot of liquidity right below here. So usually what happens is when this breaks, it breaks pretty hard. And we can go back in time where I can show you an example. So this area right here had a similar situation where we were above this area for a long time. And when it finally broke, you can see it's just big liquidation candles down. So I want you guys to watch out for that. I can show you another example is up here. We were above this trend line for a month. And then once it finally broke, it broke very hard. So if we do get a liquidation candle like that, then we are more likely in that ABC scenario where we come down, we go up, and then we come down again, or WXY, however you want to label it. It's the same targets pretty much. So again, that's our downside scenario. If for some reason we do go up, we do have a scenario for that. It is still bearish, but it could liquidate a few people, and I want you guys to watch out for that. The upside scenario would be that this is a W, then we do an X here and a Y here as our B wave or X wave, in which we would do this, then go up here, and then continue down. So we do have a target at 31K. The way we would calculate this, excuse me, not 31K, 30,700. So if this does happen, we would short at 30,700. There is a lot of liquidity above these highs. So that's the quote unquote bullish scenario. And then we do have a matching target there. So if you go like this, we hit this right here. And then if you go like this, we hit this here. So this could be a great scalp long because it's a very small stop loss. You can put your stop loss at these lows. It's about a 2% stop loss, and the gain can be 10%. So that's a very good risk to reward ratio. We personally have taken this trade already in the Discord. So if we do get up to this area, again, I do not think we should break this high, and I think it's very bearish. And if they do get us up here, I think this would be an excellent short opportunity because you can place your stop at the high, and we should break these lows, which is about a 16% unleveraged profit right there. So look out for that. Again, main scenario is very bearish. Look for a reclaim of these highs and a short. Otherwise, sit back and relax. Let's wait for these lows to get broken, and then we can reassess. Anyways, guys, make sure to check out our Discord. We caught a lot of nice moves, even one over the weekend. 25% unleveraged in Pepe long. So that was a nice move. We're holding a bunch of shorts from earlier. One of my favorite trades recently that we did was this Rose short that I did post on Twitter as well. We entered up here and we're now sitting at a 37% profit. But you know us, we use 100x leverage. So we got some really nice profit there. One last thing I want to mention was our March stats. So this March, we had a 130% unleveraged P&L. We had a 56 PLR and a 60.7% win rate. Real quick, I want to touch on the PLR because most people aren't sure what that is. PLR basically is a combination of your risk to reward ratio. So although our win rate was 60%, all of our wins significantly outperformed our losses. So we could lose 56 trades in a row and still be profitable based on our risk to reward ratio of April. So that's extremely good. If you are aware of what PLR is, you know that's extremely good. And so I just want to say it's not too late to hop into our group. The prices will start rising soon. So I definitely recommend hopping in and checking it out. We have almost daily live streams. We're going to start recording those. And it's just a great community of traders. We have some education coming soon. So definitely hop in before the prices increase. And I'll see you guys in the next video.